The stock market is starting to fall again today. What a day to start off the week. FRC, First Republic Bank. This is probably a bank a lot of you guys are familiar with. Down another 46% at the time of recording this video. Going from about $21 at the high down to $12 currently. This bank is about to fail in a colossal way. This comes after major banks have put $30 billion of reserves with First Republic. That was supposed to be a show of confidence because these were uninsured deposits. After all, the banks would get a bailout if First Republic did go under. It would likely be the same scenario that SVB and Signature Bank also faced, where depositors were bailed out. Now, there's news today that Jamie Dimon is leading talks to inject liquidity into First Republic. And a lot of analysts are coming out with notes today. A lot of downgrades happened over this weekend in regards to First Republic, saying that this bank might just be done. It might fail completely. And that's pretty bad. And even considering the last information that we had, First Republic had $34 billion of cash. Why do they need potentially another $30 billion in cash? How bad is this situation? Well, the stock market today is determining that it's pretty hard out here for a pimp. So the stock is down 46% today. It is not helping things out all too much. But guess who is in the green today? AMC Stock by about 1%. So we're going to talk about everything you need to know so far on the day. It's already been a pretty crazy day. Let's get into it. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section, and let's get to it. So AMC, we'll talk about that here in just a second, but I want to give you guys a rundown of what is going on in the markets today. And the biggest story that just came out that is causing this downside move that we're currently seeing in the markets, it says Jamie Dimon leading efforts to craft new First Republic Bank rescue plan. Big bank CEOs are discussing a capital infusion in troubled lender that could boost confidence in the financial system. And pretty much there's just discussion from some of the notes that we've gotten on this that they might just convert the $30 billion in deposits into a capital infusion, and that's literally what is highlighted right here. So not necessarily a good thing when banks need more capital. That's why Silicon Valley Bank, they were fine until they tried to raise capital, and that shows there's a problem there. And then you get the snowball effect. More people and more people start to panic. It's like you start a snowball, right? Top of the hill. By the end of that hill, it's gonna be a big snowball, right? You make a snowman out of it. That's pretty much what is going on with fear in the stock market. It starts off small and then it just keeps on going. Now, you did also get a new note out from Mike Wilson. We've seen this plenty of times throughout the second half of 2022 and 2023 so far. They're pretty much calling for a pretty rough next couple of weeks and next couple of months in the markets. A lot of it, they do cite the yield curve is actually steepening, and that is something we talked about in the last video, where those 2-year yields compared to the 10-year yield were yielding you a lot higher than the 10-year yield. That's because inflation was high. That's because it didn't look like we were going into a recession. Well, now the 2-year yields are actually falling. That is the yield curve steepening. That is a sign that the Fed will be cutting rates here shortly, and maybe the economy is not doing so hot. It does on one part show that maybe inflation might also come down, right? With a recession, with the Fed cutting rates, typically, inflation coming down is a precursor to that, right? It usually does tend to happen. And banks going bust is the biggest form of deflation that you could ultimately get. So it's going to be interesting. And this, what we're seeing today, if First Republic does fail, That's going to make Jerome Powell's job on Wednesday that much crazier, because you got to sacrifice something here. If you're Fed Jerome Powell, you sacrifice financial conditions or you sacrifice inflation. Now, if we do go into recession, that brings down inflation. But if Fed Jerome Powell caters to the markets too soon and we don't get that recession, we don't get that reset in inflation expectations the way that you would during a recession, then that's not necessarily a good thing. Imagine it like this. If Fed Jerome Powell came out Wednesday and they start to cut rates, they go crazy, right? It would probably freak out the markets, yes, but it might help kind of avoid that recession that you ultimately do need. So it's not close enough to actually get a U-turn right here, because you might not drive down inflation enough, as you want. But also, you got to keep fighting inflation. And the financial system does need somewhat of a breather here. At least it looks like these banks going bankrupt is certainly not a good thing. Now, as far as the odds of a 25 basis point rate hike, that is now sitting at 75.3%, so actually going higher on the day today, which is very interesting considering First Republic is literally about to fail. It's failing in front of our eyes, down another 46% today. A new all-time low. Is never looked this bad for First Republic. The odds of a pause currently sit at about 25%. So whatever is over 50% is what the Fed is going to do. So that's why you want to pay attention to this, because after all, the expectations can move around a lot, and you're getting the start of their two-day meeting coming tomorrow. So big implications around First Republic and how bad this banking crisis is going to get. Some people still do say a pause is on the table. Goldman Sachs came out and said they don't think the Fed is going to raise rates. Lots of other banks have also done the same thing recently. So that's a big part of the day today. As you guys do know, we don't really have a lot of economic data until Wednesday, until we get Fed Jerome Powell. So there's not too much that's actually going to be happening. Besides that, this banking crisis will be in full effect, and that's what the markets will be paying attention to. Now, if we take a look at what the markets are currently doing, going down considerably in this downtrend. We were at the high intraday of 394.17. You're currently at 391.28. The 390 level is a major support level, so on a side note, you do want to watch that one. As far as AMC stock, you're really bottoming out here, and this is kind of what I was talking about. As a lot of risk assets are selling off, it does not mean that AMC also has to sell off to the same degree as those other stocks, essentially, right? Because AMC has fallen so much recently, and this arbitrage trade is very much not a done deal. So I think that will give you some level of stability, as you have already fallen so much. This would be a different conversation if AMC was towards the highs, but it's not. And you can see the stock is up 0.65% at the time of recording this video. Given the crisis that is happening today, I don't think AMC is doing bad at all. A quick reminder of the FTD numbers that we have for today and the rest of this week. If you forgot, if you didn't watch the last video, whatever the reason is, here we go. So today, about 7.3 million failure to delivers come due today. About 12 million coming tomorrow. On Wednesday, Fed Jerome Powell Day, about 9.8 million, almost 11 million on Thursday, and about 10 million on Friday. So a huge week for failure to delivers. And then even the following week after that, Monday and Tuesday, are going to be 10 million plus days for failure to deliver. So I don't think this story is over, and like I said, I do think it can give you a certain degree of stability as well. If we take a look at the Stocko tracker data and look at the option chain for March 24th, that is going to be this Friday, you have about 18,000 calls in the money, 97,000 calls out of the money, 73,000 puts in the money, and 85,000 puts out of the money. I pointed this out to you guys in the last video, but weeks where you have low option activity, you tend to get bigger moves in AMC stock. I think that's because you don't have as much positioning. So if you start to get an influx, like a rapid influx of calls or puts, it can really drive the stock more than just seeing a lot of option activity every day. Like we seen on the option chain last week, there's so much back and forth days where you get a lot of calls, you get a lot of puts. The option chains themselves were just loaded. There's a lot of money moving there. If you start to get an influx of calls tomorrow, if things start to look a little bit better, well, that can drive a higher ratio of buying power. I think that's the best way to put it, because there should be lower volume for this week because there are less options. So hopefully that made a little bit of sense to you, but those are the numbers there. Like I said, as far as economic data, nothing is going to be happening. As far as the technicals, like I said in the last video, if you guys did not watch it, a brief recap, you want to get above about $4.50 per share. Best case scenario, about $6 per share. Worst case scenario, you're going to come down to about $4 per share and quickly retest the lows at $3.77. I don't think that is going to happen unless you do get the markets just starting to absolutely tear heads off, and that would be Wednesday due to anything Fed Jerome Powell does. I've said it before and I'll say it again. There's not really a win that can happen for this Wednesday. If the markets take it bullishly, okay, that's a different question. But it's not a good thing. It's not a good thing to, push the brake pedal on fighting inflation. It's not a good thing to restrict financial conditions even more when banks are failing. So there you have that. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.